Good afternoon, everyone. Hope you all are having a wonderful day so far. In this video, we'll go over the trades that set up for April 22nd, 2020. Now, today was a fairly slow day in terms of breaches off of the volatility box. We did not have an entry that set up in the S&P, the Nasdaq, the Dow, the Russell, gold, the 30-year, or copper using our rule set. We did, however, get breaches on natural gas and crude oil. Crude in the first hour already told us that we were facing greater than usual volatility. It failed that first hour test, so we knew that, hey, we shouldn't really be focusing or spending any attention on crude today. And natural gas was the place that offered us sort of the best, most conservative models where we were able to be on our Doomsday Conservative models. And there we did have one trade that set up using our rules and waiting for our entry, but we missed about 2 or 3 entries that were all profitable trades there. So we'll also call those out in terms of missed opportunities and sort of money left on the table. And then we'll also, when we're cycling through these charts, talk about a setup in the NASDAQ futures, which took place yesterday, which was not a winner, just to make sure that we aren't painting only a positive picture with this winner in natural gas. And finally, at the end of the video, I'll also talk about a swing trade setup in which I started an entry position, and that's in Cloudflare using some stock. So I'll talk about my plan there. A lot to cover in this video, but stay tuned. So starting with our charts, we'll start with our aggressive volatility box models first and just go through this how we go through every morning, and we'll focus on the markets where we did have an entry, so that was natural gas, and then quickly cycle through the rest of the charts. So using natural gas, we draw our line in that first full hour that the market's been open. So that's 7 a.m. Pacific for natural gas, and there we're looking to see whether or not we breached either side's aggressive volatility box lines. So we do here, and we see that price even breaks outside of our aggressive volatility box. So we step up one more conservative model, almost one more notch, if you will, and that is our Doomsday Aggressive model. So once we load in our Doomsday Aggressive models, we check the same thing. We check to see whether or not price is respecting these models. So now, towards the edge of an hour in natural gas, we get that breach, and so this is that first point at which we know we're waiting to see, right, what happens from this point. If you extrapolate this line, do the buyers win from here and we break above price action, which would be a break above our volatility box clouds, suggesting that the buyers are in control and that the Doomsday Aggressive models aren't doing a good job of capturing this volatility, which is what happens here. And so that's then our cue. So I'll fast forward, but really you have to get on that Doomsday Conservative model to play the natural gas market. And here is where you can see that this is doing a much better job of containing price action, right? We didn't breach either side's aggressive volatility box lines, and that's where we're now starting to actually respect that first hour's price range. So now let's go on to the next hour. The next hour, we get our first entry, which is actually a short, not this long here, but it was a short that's set up in real time. And after we get a breach, we're still waiting for our edge signal. That's a bearish red arrow that we should see. And if we take a look here, we don't see that happen anywhere, right? So we even hit our target here without getting our signal to get into that trade, come back up for a retest, which aren't valid for us. But even the retest ends up giving you a really nice follow through. So at this point, we're still patiently waiting. Then in that next 9 to 10 a.m. hour, we get another entry, an opportunity to get long. But once again, waiting for that edge signal, we missed a trade here, right? The edge signal came, we never got an opportunity to touch back at our cyan line, which would be our point of entry, and price just continued to go up higher. So at this point, we've missed 1, 2, and 3 trade opportunities. Really, the second one's not valid per our trade plan, but I'm just talking about that in terms of dollars left on the table. Now comes the fourth opportunity. Now keep in mind, with each one of these 3 that we've missed, or even 2 if you want to consider it, what we have seen is we've gotten the luxury to see that these models are being respected. So now comes the next entry, which took place between 10 a.m. and 11 a.m. Pacific. And you can kind of see what happens here. It's a really nice story. But price hits our aggressive volatility box entry line. We're then waiting for our edge signal, which we get right here. You get plenty of opportunities to enter at the cyan line or better. Stop is outside of the volatility box clouds, where we've given it 12 ticks of room in natural gas. And so we're looking for that same 12 ticks on the other side as that first target. And then the second target is at that gray dashed line on the opposite side, which is 31 ticks in this particular trade scenario. Right, so we ended up hitting both of those trades, but that was in almost a period of consolidation and then a nice burst up move higher. Now, did we know this move was coming? No, we just trade the probabilities that we see in front of us and our rule set, which told us, hey, we're waiting for price to breach our volatility box lines. Then we want an edge signal. We're on our Doomsday Conservative, so we have any entry above our cyan line is perfectly valid. If you get an entry at the clouds, you've managed to even cut your risk in half. But at this point, all values are fair game, and you do get that follow through. Now, in that subsequent hour, we were waiting for that same breach to try and find an opportunity to get short, which we get close, but not quite enough. And at this point, you don't really get that particular entry, and you're now in the final hour. If you did take that, you also got the same follow through that you were looking for. So really, all around today, trading natural gas just worked with the Doomsday Conservative models. Now let's contrast that with a trade that didn't work. And so this was in the NASDAQ futures yesterday. So using the aggressive models in NASDAQ, if we take a look at the charts today, and this is what much of the indices looked like, we traded inside of our volatility box ranges with no breaches on either side, so no valid trades. Now, if we rewind to yesterday, we should see something a little bit different. And that's this trade right here between that 7 to 8 a.m. Pacific hour, where price hits our aggressive volatility box entry line. So that's step number one. Then at this point, we're waiting for an edge signal. No edge signal comes. And so that gives us then our sign to switch on over to our next conservative models, right? And again, going through the same notches, that's then our doomsday aggressive models. So we switch on over to our doomsday aggressive models, and we do get our edge signal. And at this point, this is our valid trade. And on that doomsday aggressive models, we've been able to trim our risk basically much, much lower by waiting for that edge signal and getting an entry at our clouds. This was a bit more aggressive with an edge of hour entry, but I thought we'd get the follow through. And so at this point, the entry was after the close of this candle, since really any entry above the cyan line is valid. And so that entry, if I extrapolate, was very close to that 8400 area, right? That was a nice clean zone. Now, my stop on this trade was outside of the volatility box, and I thought I'd given it enough room, but it seems like evidently I hadn't, right? So my entry came as soon as we got the confirmation right here near the 8400 level. Stop is outside of the volatility box, and I was waiting for the follow through on the same distance, except this time I thought I got a better entry than even my cyan line, right? Waiting for the edge signal. Unfortunately, I ended up getting stopped out right here, almost what felt like to a tick, almost like a targeted attack, before price reversed and essentially left me being not in the trade. So this is an example in which we had the same volatility box models, the same rules, but that trade just didn't work out, and we were stopped out in this candle right here. You then had follow through where you could have gotten out for break even, so that was sort of that first kick. You then had a plummet again, so if you're watching this, you again start to feel a little good. You're like, hey, I got out of my trade, I was stopped out, but it's okay, we have lower, until price eventually reversed from here. And so really, this is where consistency in the same trade plan is important, right? We applied the same rule set that we applied to this NASDAQ trade right here, which was a stop out, to the natural gas trade today. Now, if we go to our crude oil market, we'll repeat the same exercise, and then I'll just cycle through the rest of the charts. But in the case of crude, if I go to even our most conservative models, what you should notice is that didn't do a good job of containing price action at all, right? Even our most conservative models could not help us trade crude today. And so in that first hour, we knew right here, hey, we should not be trading crude. There's other places that we could focus on. In places like the S&P, for example, we were still on our most aggressive models, still waiting for a breach with absolutely no entries. You did get several squeeze signal sort of trades if you were taking those as trend trades, which did end up giving you your targets for that respective hour. But that was the only trade setup that actually took place, right? No volatility box fades. And now finally, I'll conclude this video by talking about that setup in Cloudflare. So if we go to a daily chart of Cloudflare, I'll also load in the market pulse here. But the reason why I was first interested in this is because of it coming onto our scan with the squeeze signals indicator. Right, we had our first squeeze signal right here, which did give you that follow through to the 1272 extension from the swing high to the swing low. And we're now getting that second squeeze signal where really I'm looking at this squeeze signal to try and take us into that next 1618 extension, which is 29.29. I may very well be early to this trade and we chop around a little bit to falling to 23.69 or even so far as the actual market pulse line. But there's, I think, a few other reasons why a slightly more aggressive entry and building an entry position right here was a little bit more attractive in net. We'll use Ophir's tool here, the CML Viz website, just to get some quick statistics here to try and see, hey, was this a smart decision or not? And do we have more than just technicals to back up our decision? Now, here's the first thing that stands out in net, which is the amount of debt that it has compared to its cash equivalents, right? And we can see that it has low debt, just using common sense, which would bode well for us, especially given the current environment that we're in. And this makes sense, right? As a content delivery network, you would expect Cloudflare to survive and thrive in this sort of environment where its business is based off of the internet as opposed to a brick and mortar store where its sales can be affected and it's vulnerable. And then another reason why I think it looks interesting is that short volume ratio, which is currently at 17%, with a short volume of 860,000, and this was last updated yesterday, right? So we see that there's relatively decent short volume, so a reason for why it could go up higher. We have a squeeze signal suggesting that we have both the squeeze that looks like it's about to turn bullishly, which is represented with our indicator, along with a bullish market pulse. We see that we've just hit our 1272 extension, also made new 52-week highs, and we're looking for a push back up higher, looking to surpass that, hit the 1618 before that next period of pause, where if you also saw that automated triggers video, this is where if you do buy or happen to have shares of net, you could employ a strategy very similar to that LVGO, where you're now looking to automatically sell a covered call on your 100 lots of shares as soon as price hits 29.29. So that's all I have for you in this video. Hopefully it was useful. And as always, if you're a Volatility Box member and you have questions about any setups that are happening throughout the day, or you're confused about which models you should be using on a particular day, feel free to send us an email, and we're always here to help you with any questions that you may have. All right, take care, good luck trading, and we'll see you in the next update.